Hi everyone, I'm Sherry Bechtel, editor for Finder's Investing Channel, and I'm here to tell you all you need to know about the tasty Krispy Kreme IPO, from the donut giant's history as a public company to its latest IPO plan, so you can decide if the stock is one you'll want to gobble up. Let's dive in. Glazed Donut Emporium Krispy Kreme is returning to the IPO market. The company filed a registration statement with the U.S. Securities and Exchange Commission, indicating it intends to go public again after months of speculation that an IPO was in the works. JP Morgan, Morgan Stanley, BofA Securities, and Citigroup are the lead underwriters for the deal. The company went public back in 2000, but it was taken private by JAB Holding in 2016. And now JAB is reportedly seeking a $4 billion valuation for the brand. Krispy Kreme has a long history. The donut chain was founded in North Carolina back in 1937, meaning the company's sugary, airy treats are most likely here to stay. And perhaps illustrating its staying power, the donut maker opened a flagship store in New York City's Times Square back in September of 2020. This suggests Krispy Kreme is on pretty strong financial footing. In fact, its revenue was reportedly $322 million for the first quarter of 2021, and this is compared to $261 million a year prior. As with every public company, there are pros and cons to buying shares, and Krispy Kreme is no different. Chief among the benefits of investing in Krispy Kreme is the company's endurance. It's been around for 84 years. The company also seems to be in pretty solid financial shape. As I already mentioned, its revenue for the first quarter of 2021 was reportedly up a cool $61 million compared to the same period of 2020. But food trends coming out of COVID-19 have seen Americans seeking out healthier food options, and a company that prides itself on its sugar-loaded confections might struggle to meet the healthful needs of its customers. Competitors like Nestle are diversifying their options to include more wholesome food options, but Krispy Kreme hasn't announced any plans to do so. Now that all of those details are out of the way, it's time to discuss how to actually buy shares of Krispy Kreme. Now, so far no date has been set for this IPO, but we will keep you posted as soon as we hear something. To prepare yourself before its debut, you'll need to sign up for a brokerage account. Get help weighing the pros and cons of your options with our guide. It's linked in the description box below. Once you find a broker that works for you, you'll want to set up your account and add funds to start investing. But you want to keep in mind that it can take a few days for your funds to clear. When you're finally ready to buy shares of Krispy Kreme, you have two options. First, you can wait until trading commences and buy shares at the market price. This is known as a market order. Or you can buy shares through a limit order, and this allows you to buy shares before the stock starts trading, but only at or below a specific price you designate. Krispy Kreme's IPO is grabbing headlines because it's an iconic brand, but don't dive in without doing your research, vetting your investment options, and keeping an eye out for industry-impacting news. For more information about the IPO, head on over to our Krispy Kreme page on Finder.com. It's linked in the description box. And if you like this video, don't forget to hit that subscribe button and ring that notification bell so you'll be the first to know when new Finder videos drop. Thanks for watching.